What's good, people? Let's go over the price action for the week. So I haven't posted much this week because I've been a bit busy, but let's get right back on it. So this is the current weekly candle, as you can see here, and it's still an inside bar, trapped within the range, the high and low of the previous week. So we still haven't really broken out. We haven't made any new, highs in terms of price action. So we're still pretty much ranging. Now, we did mark up this data point, this weekly data point, as a level of interest, as well as this resistance broken and out of support. As you can see, we pulled back, but didn't quite get there yet. And then now we started pushing up. At the same time, we haven't really taken our previous week's high. So let's drop down to the daily and see what's been going on. So this is Monday's candle. As you can see, clearly inside bar tracked within the previous, that was Friday's candle, ranged. On Tuesday, we took out the low of Monday and then pulled right back into the range. And then Wednesday, which was yesterday, we started to push up. Now we've taken out the high of Tuesday's candle, but we still haven't taken out the inside bar, which is the Monday's candle, and previous week's high, which is Friday. And if you remember, we do have a daily data point here that was missed last week. So that's definitely got some liquidity, and we're probably heading to take that out. Now, at the beginning of the week, I was anticipating a move back to this weekly level, maybe one of these levels, and then continuation. But all we did is we used Monday's low as liquidity, and then we pushed higher. Now, even though we've pushed higher, this could be all that it's needed in order to go and take out these highs and continue higher. Or this could be further inducement, because I see we missed this level on last week, Friday. And then now we've created another low, a higher low here. So this could be actually further, inducement, just in order to trick people, just, gather more liquidity, and then later on come back down, take them both out. Honestly, that would be my preference. Now let's see. On Thursday, which is today, we do have some news. So we have inflation rate, we have core inflation rate, and so inflation, things to do with inflation. Those are pretty big events that could move the markets. So we'll see what happens. So let's drop down to a lower time frame. And but before then, we do have new data points here. So we have this resistance on the daily, right, that we can mark up. And we also have the 50% of this daily candle, which was yesterday's candle, Wednesday's candle. That's also a level of interest for us. So this level, we'll probably want to only see it in terms of visibility daily and lower. So that's okay. So let's drop it up down to our 4-hour time frame, and let's tighten up these levels. This would be right here. Okay, so we just started Thursday and we're trading up here. So two things I would like to see today is, one, we can pull back here to this 50% and then see a sort of a reversal signature in order to go higher, or we could pull back to the daily. I would prefer us to pull back to the daily. You see, it has some inbuilt liquidity here on the 4-hour. You look at the swing low right above the level. That's nice and clean. I do like, there is an inside bar here above this level, but it's a bit too high, right? I'd like price to go a lot deeper before it reverses, right? Trick people into thinking actually we're going lower. Now, of course, we do have this level that we have marked on the daily in terms of the overall liquidity that was left since last week. This weekly data point, right? The orange line, see that liquidity left here, and then we made a higher low, we left that. In fact, this is great because look, we had a low here and then we took out that low and then we broke up higher, right? So people will be convinced, SMC will be convinced that we had a low, a low, a high, a lower high, lower low, and then a breakout. Like, okay, now price is bullish, right? And that key signature in time that that I prefer, which is to have a low that was swept and then it broke breakouts, right? And then it pulls back and then it breaks out higher. And then we come back and then we take out that low. Now, like I told you, sometimes it's just a 1, 2, 3, and then 4. But then there could be complex variations of that where it actually continues. It does more. So it breaks out, pulls back, breaks out, pulls back, breaks out again. So this further, for those people who only need to see because some people are more cautious, right? They're like, okay, you know what? I don't trust that first break of structure. I need to see another second break of structure. There are people like that who trade like that. They need that second break of structure in order to actually consider the trend has changed from bearish to bullish or from bullish to bearish. So sometimes the market makers like to give them that second to sucker them in, thinking that, okay, since we have a second break of structure, a second higher high or a second lower low in terms of the market movement trending in price, then and only then will they feel safe to enter their trades. Now the market makers might want to make that happen, make them sucker these guys in who are easy. They just need one break of structure, like us, like me, and then sucker the the more cautious people who want to see two breaks of structure, and then come back and take both them as well as the people who are convinced with the first break of structure, take them all out, find a level, potentially something like this. I see a 4-hour clean data point right there, and then take the entry and then go. And then there's a possibility that it could come all the way down and take all this, because honestly, if you think about it, this is all liquidity that has been built up here, as well as here and here. So it could come back to take all of these people's lunch money, tap into this level, and then continue. So yeah, that's what I'm thinking. But let's remove this. Let's make our PTA clean and simple. Let's just work with what's right in front of us. We don't have to like think 2, 3, 4 steps ahead. Let's just think in one step ahead. I think that's the best way to trade. Just thinking one step ahead. If you get to the level where you're thinking 2, 3 steps ahead, that's overdoing it. Now you're trying to predict the market instead of react to what the price action is giving you. Like I said, we have 2 data points. We have the 50 daily equal 50% mark here, and then we have this daily data point here. I like these 2 levels, so we'll see what happens come Asia. No, we're already in Asia now, but yeah, so come Asia and London Open. Of course, we prefer to see these reversal signatures happen during a market session open, such as we've already opened in Tokyo, so now we'll wait for like London or New York. The news release that we do have is, let's see, it's about 2:30, so this is in New York. After New York Open, maybe like a couple hours after New York Open. So yeah, that might be the catalyst for either price to manipulate and go lower, tap it into these levels, or it could be the price might already be at these levels, and that news release will then fuel the reversal signature for us to take. So yeah, that's what I have for you today, and yeah, we'll monitor and update as price goes along. Thank you very much. Peace out.